Hello everyone, welcome to our live stream. So in this session, we are going to talk about recession-proof investing. I will start by sharing, a presentation on the same, and then we'll take the live Q&A. I have Amitesh from my team here as well, who will be helping us, during the live stream. So we'll be discussing it throughout the session, and also we will be taking the Q&A after that. So let me just start the sharing. All right. So we'll do a quick session today. We won't make it, very, very long. In this session, first we will talk about what recession is, right? And why are people talking about this term recession? Recession is not something that is very attractive, something not that anybody looks forward to. I remember in 2008 when there was a recession, there was a lot of job crisis and things like that. So obviously nobody wants to look at recession, right? So we'll understand what recession is, why people are actually talking about it, and what you can do to actually become recession proof. What you should do in your portfolios right now so that you are protected from recession. To start with, we'll start with a poll, right? So, we've been hearing about recession a lot. So, what are the chances of recession in the 6 months according to you? So, is it a 0% chance? Is it a 30% chance? Is it a 50% chance? Or is it a 100% chance? So, I think you should see a poll on your screen right now. Uh, and I think people are putting in their answers. Uh, so, if you are very very positive about the market, then you might think that there's a 0% chance. But if you are very scared, then you might think that's a 100% chance. Looking at various models in various economies, obviously there's a lot of chatter about recession. If you look at the Google Trends search data, you will see that people have started talking a little bit about it, right? So there's a trend that has formed about recession. So that is what yeah, is the issue right now, right? Like what is the probability of a recession? So I think we have opened the poll for a sufficiently long time, and I'll just end the poll here, and you all can see the answers. I think 67% of the people have said that, 50% of people have said that there's a 100% chance of recession in 6 months, and around 30% people, around 25% people think it's 30%, and 25% think it's 50%, right? So which is all understandable, right? So we will address that in the first part of this presentation. What is the chance of recession? Amitesh, what do you think? What is the chance of recession in the next 6 months?
Like seeing the current trends, I am anticipating not too much and not too less. So I think 30% seems to be reasonable.
Right, right. I mean, that's an interesting answer.
Yeah.
Let's look at to start. To before we go about thinking about the probability of recession, let's understand what a recession is, right? So a recession is nothing but the bottom of the economic cycle, right? So the economy sort of works in a cyclical fashion. There is an expansionary phase, and then after the prices or the economic output has gone up sufficiently, at that time, there is a correction that happens. Some people exit, some people, book their profits, and there's a contraction that happens. And as the contraction, reaches the bottom, that phase of the economic cycle is called recession. And how do you identify a recession? You will see that the economy activity has been slowing down for at least 2 quarters. There is a loss in consumer confidence. People are not confident if they should be spending money. Companies are seeing that their earnings are slowing down or the revenues are slowing down. Also, we'll see that unemployment goes up, and suddenly the stock market is correcting a lot, right? Because obviously earning expectations have sort of reduced a lot. So that is what the session is. So obviously, we don't have all of this going on right now, right? So unemployment is not that high right now, and companies, whereas they are being affected by the inflation, they are not at the bottom. right? So that is our understanding of recession, and we think that, obviously we are not there yet, but there are a lot of triggers that could cause a recession, right? So why are we expecting a recession, right? uh, so the answer to that is coming from the US Fed, right? The US Fed has been hiking their rates, right? Whenever the US hikes their interest rates, at that point in time, the demand in the economy goes down, right? Businesses can't borrow money easily to, spend on their capital expenditure. There is, a lot of other issues that spring up, and why is the US doing this? They're doing this to, protect themselves from the high inflation, right? So, and because the US is because the economy is already very very in a slowdown, and now that the US rate hikes will impact the demand even more, at that point, we can see maybe the recession could happen. So that is what the expectation people is, that economy is already at a slowdown, and now on top of it, the US is hiking rates, right? So that is, I think, the main concern that people have. Now, talking about what is the actual probability of a recession. So, I have this chart from Wall Street Journal where, they have surveyed a lot of economists, and what these economists think is that the chances of recession have increased a lot during the last few like last month or so, right? As the rate hikes have become accelerated, the probability of recession has also increased a lot. So right now, people actually think there's a 40% chance of recession, whereas, a couple of months back, it was quite low, less than 20%. So whenever interest rates are hiked, they, you know, they hamper businesses and they induce job losses. Similarly, the like we all know, due to the COVID crisis and due to, Russia-Ukraine crisis and crude oil price hike, the economy is already struggling, and with these with now rates being hiked, the economy could actually go into a slowdown. So that's why people are expecting recession. Second is that while your unemployment is not high right now, but people are seeing that the wage growth rate is slowing. So if that is slowing, then it might, go to unemployment also. And also there is that, you know uh, while they are trying to do this rate hike as a medicine for the economy, it might become worse than the disease, which is inflation, right? So while the inflationary concerns are bad, the rate hike might even be worse. So that's why people are thinking that in already slowing environment, a rate hike can bring out a recession, right? So that is the probability of recession by, the leading economists, what they have put in. But there is other alternative scenario, right? So it's not definite that we are going to have a recession, right? Recession is not the only scenario. What could also happen is that the inflation that we are seeing in the economy could slow down from this point onwards, right? So if you look at the inflation chart of the US, right? I have the chart of the US inflation here, and you will see that crude oil forms and the housing forms the highest percentage of the inflation that is happening in the US, right? And now that the crude oil is cooling, right? Crude oil prices are falling down, then the inflation might have reached a peak and it might start calming down from the next month. Similarly, uh, your housing prices are at a peak and they are bound to correct, so that might also, ease inflation. Plus, metal prices are going down very rapidly. China, which is the biggest consumer of metals, is seeing a slowdown, right? And it's not like a sudden slowdown. That slowdown has been there for the last 5-8 years, right? So the metal demands will also be low, which could lead to prices going down and inflation coming. Another point that a lot of people put in is that the inventory levels in the United States are very high, right? So Walmart and all these people are storing a lot of inventory right now. So instead of hiking price, they will actually cut down their prices right now to, let go of that inventory. So that's why we think that, that's why many people think that inflation is actually going to correct, and all this recessionary fears might not come true if inflation corrects on its own, and the Fed rate would not be that aggressive. So that is what the alternate scenario here is, which is a scenario that that the recession does not come, but a correction in the inflationary rate happens because of these various reasons. Now, to come now, coming back to our main point, right? That let's suppose there is a recession. Let's suppose situation gets bad from here. Where should you invest? What is the right place to invest in recessionary environment? So you see this poll on your screen where we are asking you, where do you invest in a recession? So should you invest in infrastructure? Should you invest into utilities? What are utilities? Uh, the your BPCL, SPCL, your road and transport and things like that. And then you have banks where the banking sector. Then you have your consumer staples, right, which is these consumer stocks. So where should you invest right now, right? When not right now, but when there's a recession. So you must be seeing this poll on your screens. Let's look at what the people are answering. So I can see here that a lot of people are talking about consumer staples. Some people are talking, voting for banks. A few of them have voted for infrastructure as well. Uh, so these are all very interesting answers, and I'm very surprised that nobody has voted for utilities. Right? Utilities is a very is actually a core place to invest when there's a recession, because you will continue to get your water supply, you will continue to get your usual utilities, right? Even when there's a slowdown, right? So even though you might stop buying expensive cars or expensive things, but you will continue to do the basic utilities, right? So I think we have had this poll for 3 minutes. We have a number of answers here. So I'll close this poll. And the answers are, what you guys have put in is that the main place where you want to invest is banks or consumer staples, which is a very, very interesting answer, right? So where do we invest in recession? So that is the topic that I'll cover in this part of the presentation. So let's look at the chart of the various sectors over the last quarter, right? Where do you see the performance has come from? Which sector has outperformed the Nifty and which sector has underperformed the Nifty? You will see that cyclical sectors, right? Something like metal. When do we use metal? We use metal when there is economic growth, right? When when we are building bridges, when we are building infrastructure, when we are building malls, or when we are building a number of things. That is when we need metals, right? So when there is cyclical growth in the economy, right? We are in a growth phase. That's when you need metals, right? So metals obviously have underperformed because that growth is slowing down. Uh, your IT has underperformed because it has a huge exposure to the US market, which is under trouble, right? Similarly, your real estate has suffered because real estate prices would go down if rates go up. But what has flourished is the defensive sectors, right? So the consumer staples, the utilities, healthcare, consumer durables, right? So like I said, that even if there is a recession, right, you will not stop getting drinking water, you will not stop you know getting
True.
cooking gas, you will not stop buying bread and basic necessities, right? And everybody will continue to do that. That's why your FMCG sector and even auto right now, right? Auto is the sector which is which was at the bottom some time back. It was really suffering, and now certain issues are being solved in that sector, and that sector is getting a little attractive. Uh, so in a recessionary environment, we have to switch our allocation from high risk sectors to slightly defensive sectors. Like if you guys, if we have any of our investors in Right Research here, you would have seen that last year our portfolios were full of metal and IT, right? We The performance that we have achieved is because of the cyclical growth that metals were seeing and the huge outperformance that IT sector was showing, right? But somewhere around the beginning of this year, we saw that metals, in April, May, you would have seen that the metals corrected very aggressively, and IT also corrected a lot, right? And we have, over the course of the past couple of months, have switched totally out of these sectors. In IT, we only have Tata Elxsi right now. In metals, I think we don't even have any exposure. And we have switched our allocation tactically more towards FMCG, more towards auto, banking, and financial services, which we think will flourish, right? When interest rates rise, at that point in time, banks who lend money will tend to earn more interest income. Plus, banks are in a very very healthy state right now. Like we saw today, the number that HDFC Bank has posted 20% growth, which is amazing. And sectors like these might flourish, and we have to switch, right? So if we were allocated for a cyclical growth last year, we have to pivot to these defensive sectors. There's no, I mean, I don't believe in, obviously we have to go to safer horizons, right? So in all of our portfolios, you would have seen that we have increased some allocation to bonds, some allocation to gold also, right? uh, because bonds will do better when rates are hiked. But equity is always, you should be a component of your portfolio. And the portfolio that we have researched so well, we believe that you shouldn't be going 50% into cash or things like that. We don't believe in that. What we believe is that we are slowly adjusting our allocation to cash depending on the market conditions. And we are only 10 to 15% in cash right now in the momentum portfolio. I think it's 10%, and that's why it is picking up as the market has started picking up. Similarly, when we're talking about other type of sectors where you can, factors where you can invest into. So this is again a chart of, I think, last 1 year, right? What is the performance of the various themes in the market? This is as per NSE, right? So obviously, our momentum portfolio is very different from NSE's momentum portfolio, right? But out of the standard thing that NSE publishes, you will see that your value and dividend, these are the strategies that have worked really well. Also growth, right? What growth means is not performance growth, but growth that the company has shown in their earning or in their revenue. So at this point in time, people are not going for undervalued company. People are going for, people are not going for overvalued companies. They're going for undervalued companies that that are showing growth and obviously dividend, right? So if you are investing into a dividend yielding stock, even if your the prices are going down, you will keep on receiving cash in your bank account because the company is giving you dividends, right? So dividends become attractive during bearish phases in the market. So if you're looking at any factor to follow, I think at this point you should be going for dividend yielding, high value stocks, and maybe high quality stocks as well, right? So that is the strategy that we should have. And obviously, momentum for us is doing well because we have pivoted those sectors. But if you are to pick a factor right now, picking a dividend yield and value might make a lot of sense. Now, again, another point here is that, which is based on our scenario, that the recession might actually not happen because commodities are correcting, right? So I have here the global commodity prices, right? The GSCI index that Goldman Sachs publishes, and you can see that it has aggressively corrected in June, right? It has very aggressively gone from 800 to 660 in the course of a month, right? Which means that commodity prices are going to go down, right? So in that phase where you see that instead of inflation, a sort of a deflation is happening, at that point in time, again, it is a time to bet on consumers of commodities, right? So people who have been troubled by inflation will tend to gain now, right? Because the input cost will become cheap, right? So your automobile is obviously one sector that will stand to gain, as the input metal cost and input commodity costs are going down. Cement consumption, your FMCG companies use a lot of oil, right? and also banks, who will gain from this, uh, the correction in the commodity price. So these are the sectors that you can bet in the scenario where we see inflation is correcting instead of rising from now, right? So that is where we think we can invest into in a recessionary or in whatever environment that we're going to see in the next 3 to 6 months, right?
True.
Now let's do our third poll, which is, how do you take advantage of a recession? How can you actually uh, take advantage of this condition, right? We are in a bear market. How can you take advantage of this correction in the prices? So the option that we have is, one is, panic sell everything, give up and go into cash. Second is that you start a SIP and start buying at a slightly lower price. And the third option is that you pivot to certain sectors which might be more suitable for this particular scenario. So we have a few votes who have come in. We can see that people are voting for SIP a lot,
Yeah,
which is really
80%.
smart. Yeah, which is really smart actually. And we can also see some people are voting on pivoting to a suitable sector or theme, which is again an interesting option. So we have had this poll for 2 minutes. Let's end this poll and let's look at the final answers. So I think a lot of people have said that SIP is the main thing that you can do, and then pivot to suitable sector and themes, which makes a lot of sense here, right? So how do we become recession proof? That is what we will
We
cover
will
in the
cover in
third
the third.
section of our presentation. So yeah, first thing is that you do SIPs right now. You average out your price, right? So we are not saying that that this is the bottom and you have to you put a buy order for all your money, right? That's not the correct scenario right now. And no, you should not hear anybody telling you that, because that is not the correct advice at this point in time. But the correct advice that we believe is that in the next 3 to 6 months, we could see the recovery coming back, right? So there might be little short-term pain where rates are being hiked and there is uh, there is inflationary concerns, but soon we'll see, because of the correction in the commodity and the metal prices, we'll see that the prices will correct, right? The inflationary forces will go down, and we could see the markets coming back up, and the growth phase in the market coming back up in the next 3 to 6 months. So if you have been buying at these lower prices, at the price of Nifty when it is at 1600, 16,000, right? Or lower, then obviously when the Nifty picks up that pace, then you will have made a profit, right? And we are not saying that you bet everything on that, but looking at this chart here, you can see that if you start buying while the market is decline also, and when it's growing up also, right? Then it is much smarter than buying you know at the beginning and then forgetting about it, right? Because you are taking advantage of the downtrend as well as the uptrend, and your average price becomes much lower than what happens when you do a lump sum then. So SIP, I think, is a very very smart choice right now, and we can see that a lot of people have actually started doing that, or are waiting for some more signs. But I think right now is a good time where we can start looking at SIPs into the market. Second is, obviously, you focus on specific sectors, right? So we identified consumer, right? So whereas inflation forces are there because of the shock that the economy has seen, right? There has been COVID, there has been a bunch of things that have hampered the economy, right? Russia-Ukraine crisis, crude oil price hikes, right? So obviously there is a little bit of fear on that side, but people have just come out of lockdown, long-term lockdown, and the consumer is spending money. Retail chains are posting very very good profits. Similarly, automobiles are doing really good, especially consumer automobiles, right? So it is a good time to bet on consumer and automobiles. Similarly, banking, in a high interest rate environment, banks will continue to do well, and when when even when the rates go down, they will have more businesses, sort of coming in into the banking system, borrowing money, and that should also, grow the banking system. So banks are a good long-term bet from here. They're at a bottom, right? The valuation ratio of the banks at the very low right now, and it's a good time to invest into banks. Similarly, like we said, that consumers of commodities, right? So now that the commodities are falling down, you have to bet on consumer of commodities. Right? So focus on specific sectors, and obviously, we have to be tactical, right? We have to be very, very tactical about our asset allocation, right? So, cash has to be a part of your allocation, or not just cash, but bonds have to be a part of your allocation right now, right? So nobody is telling you, nobody is confident enough to tell you that you have to do 100% equity right now. You check any of the portfolio that we are offering right now, each of them have at least 10% cash in there, or even other bonds and gold and mix of those things, right? And why do we have that allocation? Because that cushions us from the volatility, right? So we have to be very tactical about asset allocation. Asset allocation is very, very important. But another important part is to be tactically prepared for whenever the rebound happens in the next 3 to 6 months, right? So we believe that when the rebound happens at that point in time, the economy might have seen a lot of slowing down, right? The sentiment might have dampened a little bit, and at that point, the government will try to uh, revive the economy by doing again those investing themes like the PLI, the Atmanirbhar Bharat, etc., right? Which was in this customized manufacturing units, right? So we think that the Atmanirbhar India theme that we have recently launched, right, the New India portfolio, that should see a lot of growth coming back in when the market rebounds, right? So that is a very interesting idea that we have, that these sectors, right, like your specialty chemicals, specialty metals, white goods, and a lot of these interesting things will stand to gain a lot when the rebound happens. And we should start looking at this thing, yeah. Because investors are always forward looking, right? If you realize that this theme is going to rise at the top of that, when once it has already risen, then we'll miss out that boom. So we have to start watching what might work when the economy sort of recovers. So that is what we think we should do for becoming recession proof. Talking about our performance update, I'll give you a little brief about how we are performing. So last week and last month has been good for us. After such a long time, it is.
So, Sonam, we have a question coming. What is the impact on India, especially? Like, rupees value is like going towards 80. So the question is,
Right.
uh, what the maximum extent that we can expect in the coming time for the rupee value?
So, some a few months down, before I was thinking 80 would be the limit, but
Mm-hmm.
now we think that 80 has already been touched, right?
Yeah,
So
yeah,
we could see it worsening a little bit. Obviously, RBI has a lot of cash to protect the currency, right?
yeah, sure.
So we won't see a crisis like Sri Lanka or anything like that. And with the measures like the wash through account and all coming in, that would be also very interesting. Um, Obviously, rupee whenever it depreciates, it's a very bad thing for our economy, right? Because our current account deficit will automatically go up, right?
Yeah.
And our debt increases.
Mm-hmm.
So obviously, we have to watch that. Only if crude oil corrects, right? When crude oil corrects, when metal price correct, that will be a relief for the economy. When the Fed sort of calms down on their very, very aggressive stance, will be the point where we can see some rupee sort of appreciating. But yeah, we
Yeah.
nobody, like, I think the RBI doesn't have a problem with rupee slowly depreciating right now because of the global condition, but they will protect it from totally spiraling down like any other, like Sri Lankan currencies or things like that, right?
Okay. Yeah. Yeah.
Yeah. So I just wanted to talk a little bit about performance update before we go to the Q&A. Our portfolios have been recovering a lot. Momentum gave a 4.7% weekly, and around a 3.6 on the monthly scale. Similarly, innovation, new India, small caps have all been recovering at a rapid pace. You can look at the momentum portfolio here. The chart looks attractive after such a long time. This, but yeah, we have to be very very careful, right? So again, to our subscribers, we do the rebalancing of momentum on a monthly basis now, because we observed that when we are doing it on a weekly basis, it was not, it was hampering the performance more than adding any value to it. Obviously, when the market has a big drawdown or anything like that, then we will take action in the middle of the month. But otherwise, monthly is much more convenient to the customers. Plus, it, if you analyze the performance of our monthly momentum and our weekly momentum over the last 3 months, the monthly momentum would have had like an outperformance of 5% or so, right, in that period. So we believe that monthly is the strategy to follow, and that's why we are doing monthly rebalancing right now. And we are seeing that our momentum is recovering faster than many of the other momentum portfolios that are out there. If you look at our other portfolio, like innovation has been recovering at a rapid pace. Similarly, our new India is also picking up a good pace. So that is pretty much it from the presentation side. Maybe we can do any other questions that you think, Vitesh, that are there, which are interesting.
This one question: what's your view on including gold in portfolio to hedge against volatility?
Yes, so we do have gold in our this one, in our multi-factor portfolio, right? We have around 10% gold in multi-factor, but if you look at the price of gold right now, gold has also corrected a lot, right? Which is very surprising. People think that gold should be a hedge against inflation, and when the inflation is rising, it should go up. But gold has actually corrected very drastically, over the last month or so, right? So we do have gold in the multi-factor portfolio, but
Okay.
we have to see.
Yep. Yep. Uh, I'll take one more question. What's your view on exposure to U.S. markets, especially Nasdaq, uh, as it's corrected has corrected quite a bit?
So, I mean, see, that will again be very, very dependent on what the US Fed is doing, right? If the US Fed keeps on aggressively hiking the rates, right, then their market will continue to struggle, right? Uh,
Hmm.
so we have to again. So I think that will be the whole trigger, right? When the inflation calms down and the US Fed becomes calm, that is when we have to take a call and bet on Nasdaq. Obviously, if you want to invest, I don't think it's a bad idea. You can start an SIP in a Nasdaq ETF, because it is actually at a massive low right now.
Yeah. Yeah. True. Okay. Yeah. I think we
Somebody was
have.
asking us about any coupons that we might have, right? So let me share a coupon that our users can, like our listeners can use for, if you're watching this webinar and you're looking to subscribe, then we have this coupon called W July 30. You can use that, and you can get around 30% um discount on any of our portfolios, right? But we would encourage you to go for a long term plan right now. Our long term plans are very cheap compared to our short term plans, and that would be the best idea to do right now, right? You invest for the long term. You buy. We are giving you a long term subscription for cheap right now to encourage you to be a long term investor. And this is the time. This is the tough time when when this will make or break your journey as an investor. Where you should be betting on on these in the portfolio for a long time.
Cool. Cool.
Any other interesting questions you see, Amitesh?
You're quite vague. This one question: any book that you recommend right now?
So, any books that I recommend right now? I read this book, Hard Things About Hard Things, recently. I thought that was really interesting. It's not related to the market at all, but it is related to what for startups, right? What is the troubles they face and how they should survive and what they should do. So it's very interesting. Uh,
Okay.
Somebody is asking about an inverted ETF to hedge the portfolio. So inverted ETF is not present in India, right? I mean, it is present in the US and all. It's not present in India. Uh, so we can't recommend anything of like that. Somebody is asking us which strategy do you recommend for stability along with momentum, right? So for stability along with momentum, I would say that you could include our balanced, right? So our balanced right now has around almost 15-20% bond allocation plus around 10% gold allocation. So it is very on a very safe side, and it has other exposure is also to very very safe sectors. So that would be a good mix along with momentum to bring down your risk. Somebody is asking which sector is agnostic to rupee USD drop. Uh, See, IT sector, I think, it is, like we saw in the earnings, we're following IT earnings, all of them are, their revenues are not dropping, right? They're still making, they still have business going on, right? And they are making that money in dollars, right? So obviously, IT sector should be immune to rupee depreciation, but their prospects are falling, right? Like they get their business from the US, and the US companies are falling. So that is one rationale. Again, for the pharma sector, they get a lot of revenue in US dollars, so that would be another sector that you can look at. Uh,
Okay. Yeah. There's one more question. If how long do you think that this recession is gonna last?
so the recession. See, that is again a very, very tough question, right? But what we've been seeing, if you look at the history of recessions from decades, you will see that the recessions have started to become smaller and smaller, right?
Yep.
Yeah. So in 2020, we had like the recession for like a month or so, right? In March, it fell and then it came back, right?
Hmm. Yep.
And but that is that was one scenario which was very extreme. But even 2008 lasted like a year or so. Right now, I think if we can see any correction in inflation, that then the recession fears itself will continue to go down. So that is what I believe. That we are not in a recession right now, but there are chances for it are getting stronger because of whatever is happening, in the global market.
Yeah. Cool. Uh,
Somebody is asking about recession-proof stocks, if possible.
it's mentioned about
See,
IT right now.
yeah, IT is interesting. Also, you buy your FMCG, ITC, HUL are doing really well, right?
Yeah.
Those are good recession-proof stocks. Also, right now, I think betting on the auto sector will not harm you, right? Because that sector is going strong right now, right?
Yep. I think we have taken
Uh,
most of the questions.
yeah, we also saw some very interesting stocks in defense industry which are doing really well, and we have them part of our new India portfolio, so that might also be very interesting for people.
Yeah. Yeah. True.
So thank you everyone, thank you everyone who joined us. We had a great time, and I hope this was helpful. I kept this presentation very simple and very topical. So I hope this was helpful for you, and we will continue to keep on doing these discussions going forward, so that any investors who, if anybody has a question, right, we can discuss it together. Also, I think we have started a community feature on our website, right? Like, if you go to community.wrightresearch.in, you can join our community where you can ask questions, and like customize social media for only right access subscribers, right, where we can discuss things amongst ourselves. So that is also a very interesting option, that please explore that. And thank you everybody for joining us in this live stream. I actually have to. I'm doing a Instagram live on LearnApp at 5 p.m. So if you have time, please join us on Instagram at 5 p.m., where we will be, answering some very interesting and very fun questions out there. Thanks a lot. Thank you everyone for joining us.
Thank you. Thank you.